Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about United Lab interim report. The United Laboratories International Holdings Limited offers a diverse range of businesses and services across various segments. These include research and development of pharmaceutical products, manufacture of bulk medicine, intermediate products, and finished products distribution and sale of pharmaceutical products, provision of oral antibiotics, antimicrobials for injection, anti-cold products, and other medications, production and sale of soft capsules, casings, management services, trading in pharmaceutical products, holding trademarks. The company operates globally with presence in China, India, Europe, the Middle East, South America, and other regions. United Laboratories International Holdings Limited has seen a significant stock price increase of over 97.04% in the past year, driven by several positive news developments. The company's expected rise in half-year profit, primarily due to a substantial license fee income from Novo Nordisk A/S, has contributed significantly to this growth. Additionally, Novo Nordisk's agreement to pay up to $2 billion for rights to an experimental obesity and diabetes drug has likely fueled investor confidence in United Laboratories' partner pipeline. The company's core businesses are also stabilizing and expanding, with new production capacity planned to commence operations in October, further suggesting future growth potential. The primary drivers of revenue growth or decline can be identified through an analysis of the financial summary provided. Revenue growth is primarily driven by the increase in sales of insulin products, which saw a year-on-year increase of 75.5%, and the introduction of new revenue streams, such as license fee income. Geographical expansion also played a significant role, with Europe experiencing a staggering 324.6% growth. On the other hand, revenue decline was observed in intermediate products, bulk medicine, and others categories. The decrease in sales from these categories can be attributed to geographical declines in India, -47.7%, and Middle East, -62.5%. Additionally, the animal healthcare segment recorded a year-on-year decrease of 15.9%. Key drivers of growth include insulin product sales, geographical expansion in Europe, introduction of new revenue streams. Key drivers of decline include decrease in intermediate products and bulk medicine sales, decline in sales from India and Middle East regions. The company is generating positive operating cash flow, as evident from its increasing net cash from operating activities. In 2025, this figure stood at RMB 1,997,122, a slight increase from the previous year's RMB 1,845,577. This trend suggests that the company is successfully managing its finances and generating sufficient cash to meet its operational needs. The company's debt level and interest expenses have undergone significant changes. The total borrowings have increased by 62.9%, from RMB 3,138,283 to RMB 5,110,895, indicating a substantial rise in the company's debt. However, borrowings due within 1 year have decreased, suggesting that the company has managed its short-term debt effectively. In terms of interest expenses, interest paid and interest on borrowings have increased, but total interest expenses have actually decreased by 17%. This anomaly may be attributed to changes in the company's borrowing structure or interest rates. Overall, the company's debt level has increased significantly, while interest expenses have shown mixed trends. The company's financial performance varied across different segments and products in the recent period. Notably, intermediate products and antibiotics products showed significant growth, with increases of +15.4% and +23.1%, respectively. Finished products also performed well, achieving a segment profit of RMB 1,505,572. On the other hand, bulk medicine and insulin products struggled, experiencing declines of -26.3% and -43.2%, respectively. The performance of these segments was inconsistent across different periods, with some showing improvement while others worsened. The regional performance is not explicitly mentioned in the summary, except for a mention of subsidy income from the PRC government. In its recent financial summary, the company has demonstrated a commitment to returning value to its shareholders. Notably, it has paid dividends in the form of an interim dividend of RMB 16 cents per share, totaling RMB 726,811 during the period. Furthermore, subsequent to the reporting period, an additional RMB 315,684,000 was declared as an interim dividend. In addition to paying dividends, the company has also engaged in share buybacks, with a balance of 1,038 shares at 1 January 2025. This indicates that the company has actively sought to reduce its outstanding share count through repurchasing existing shares on the market. That concludes the financial summary for United Lab. Feel free to comment below, and I will be happy to answer them when possible.